Hello and welcome to another edition of Beyond the Blueprint podcast. I'm your host, Jeff O'Donnell, and joined with me today is Matt Brawner, co-founder and principal of Endurus Capital. Matt, thanks for being with us today. How you doing?
I'm doing well, Jeff. Thanks for having me on the show.
You're very welcome. So let's kick things off. Matt, you've had a fascinating journey, starting with the $5,000 investment at Perkins Restaurant and growing that into a portfolio of 3,000 units. Could you tell our listeners how you got started and what the first leap of faith felt like?
Yeah, it was actually Denny's. That Grand Slam breakfast is what
Oh,
kicked it off there. Denny's in Coon Rapids, Minnesota.
nice.
And I think as I shared when we were chatting beforehand, I needed friends. I was living with a high school buddy, working at Target at their corporate office, struggling to integrate myself into a new city,
Hmm.
and met a group of guys through another friend who were drinking beer and throwing $50 a month at the stock market. And I was like, well, I like to drink beer. I'll hang out. And then there was one of the guys who I now share a large property with said, hey, we're going to go buy some real estate. If you're serious about investing, come to Denny's the next morning and we'll talk more there. And that was the leap of faith. Like I was renting a room, sleeping on a futon. Five
Oh,
thousand
wow.
bucks was all the money I had to my name.
Yeah,
I was like, well, if I lose this, that stinks, but no one's depending on me to eat. I feel employable,
right.
so I'll make this back, and bought a townhome with it. And no one would give us a loan, so we had to write quick claim deeds, and I had to write the check to my I call him, he's one of my closest friends now, but at the time I didn't
Okay.
know him really from Adam, because
Right.
like the bank would only give him the loan, so we had to prove like he had the money. So I'm like, oh, there's this guy Ben, like I don't know, here's $5,000, Ben.
Nice.
So
Nice.
that led to rental real estate and just being willing to try and do something different. Right. I wish
Yeah.
I could tell you that I did this analysis that says, hey, it's real estate. Here's the best risk adjusted returns. But it wasn't. It was based on a couple of gut feelings. One gut
Yeah.
feeling was that if I just go to Target every single day, put money in my 401k, I'm not going to be where I want to be financially or
Right.
professionally, uh, lead my family a certain way. And
Hmm.
uh, the other piece would be at that time, everyone was telling us the real estate market was never going to come back. And so it's like, look, these properties are selling for 80. It takes 150 to build them. There's
Yep.
got to be a way to make money here. And thankfully
Right.
there was.
Nice. 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 That's a great story. Now looking at the broader industry today, you've moved about $60 million in assets over the last 15 months, you said. What are the biggest shifts or trends you're observing in the multifamily market right now?
Everyone's still got a good amount of shell shock, for lack of a better term.
Hmm.
You had 2022. A lot of us who entered in since 2011, since the GFC, operated in a low rate environment. That went away in late 22. And then on top of that, we have rampant inflation. And so everything on your expense side of your P&L, you are just begging, pleading, hoping to keep it 3 to 5% increases. Now you hear people talking about, oh, insurance, it's a soft market. Like, well, it stopped going up and it went up 40%. Right.
Right.
So
Right.
the industry's been transformed. And then you have a once in a generation amount of supply that's coming online. So you
Right.
just to put the for rent sign out, it would the unit would fill up and you'd be good. It's not the case. There's a ton of competition out there
Hmm.
right now. So
Yeah.
the trend in the industry is that you really have to know how to operate these properties, right? It's not
Right.
enough just to be able to put together a capital stack to buy them and then just have cap rates magically compress and appreciation do its thing over time. No, you
Right.
got to manufacture your value.
Yeah. Yeah, no, that's really insightful. Thanks, Matt. You mentioned before that people are messy and can actually drive the value of a property. When managing 1,500 units in house, where does that human friction show up the most for your team?
Well, we have people managing people. So it's a lot. You have where people live, which is a highly personal, highly regulated environment.
Hmm.
So it's property management's hard. And then I'm in charge of managing those people. And our team is blessed with some wonderful individuals. And it's their ability. And that's what I think has been another thing that's come to fruition over the past couple of years. Look, every apartment has four walls and a door, but
Right.
People stay because of the person. They have to be genuinely sold something, and they have to be retained. It's customer service that we're
Hmm.
in. And so those individuals that you have working at your property, they drive your value.
Right.
And working with that day to day can be hard. Your people they want raises, they make mistakes, they have to be coached. It can be exhausting, but it can also be a blessing.
Right. Yeah. It sounds like managing those personalities can be a real headache sometimes, eh?
A headache and a blessing, yeah.
That's right. So beyond that, what's currently working really well for your company?
Since we have taken more control over management, it's certainly been a lot of work, but
Hmm.
our properties that we manage are performing better, just because I have my hand in every aspect of operations. No one's ever going to care about your money the way you care about your money.
Right. Absolutely. And on the flip side, what area of the business is currently the most frustrating for you?
We still have a couple of loans that are on floating rate debt that we're trying to refinance. So the war in Iran's hard. There's a lot of stuff that is totally out of my control there.
Yep.
And I would piggyback off the comments I made earlier, right? Like what we're doing is working, but it's exhausting. It's a lot of work
Yeah.
to manage apartment units.
Right. Um, okay, so here's a fun one. If you had a magic wand and could fix just one thing in your business that's holding you back or slowing you down right now, what would that one thing be?
Well, if somebody could magically open the Strait of Hormuz so that all this nonsense in the world would calm down, that would
Yes, I hear
be
you.
request number one.
Right.
Request number two, I just need consistent interest rates. It's the volatility that makes it difficult. And then I would say more people. It's if you own a business, it's people that drive your opportunity.
Right. Um, so if you were able to solve that problem, what would that mean for your ability to scale to the next level?
I think we could continue to just take on more. I think that we could take on larger properties. I think that we could scale independent of personality, right? Like we have a
Right.
pretty thin team right now. So it just doesn't give us a whole lot of margin for error.
Right. And looking ahead, where do you envision Endurus Capital being in the next 6 to 12 months?
God willing, bigger and more sophisticated, right? I want to continue to grow, but I want to continue to become really, really focused on property types so that we can own and operate with excellence. And real estate's highly inefficient, right? So it's really hard to say like, oh, I do retail and I do industrial and I do multifamily. Like, even within multifamily, like what type of multifamily in what markets? And that's a blessing of real estate because that's where you find investment opportunities. But it
Yep.
is your ability to uh, understand and exploit inefficiencies that help you create value.
Yeah. No, for sure. So what are your big goals for the growth if there's growth involved?
Generally, we're trying to buy about 4 deals a year, bring in everything, in-house as we go about it. Typical deal size is, about $10 million. So, I mean, you do the math, it's how can we add $40 million worth of real estate to our portfolio every year?
Right. That's a big goal. That's good though. So yeah, Matt, it's been a real pleasure having you on the show. Where can our listeners find you or contact you to learn more about Endurus Capital?
Best place is LinkedIn, Matt Brawner on LinkedIn.
Okay. Amazing. Well, that's all for this episode of Beyond the Blueprint. I want to thank our guest, Matt Brawner, for his insight and expertise. It's been a real pleasure. I'm your host, Jeff Woodall, and we hope to catch you on the next one.
Thanks for having me on, Jeff.
You're very welcome.